Welcome to the Money Making Money Mindset. My name is Dr. Buy More because when the stocks are falling, everything's going down. What do? I just buy more. This is going to cover the basics of the Buy More strategy tool. We have a brief introduction, talk about the features and how it works. Brief introduction. Disclaimer: this is not financial advice. I am not a financial planner. I have created a trading tool, not a magic wand, and I'm simply sharing that tool and teaching people how to use that tool. Money making money mindset opinions expressed are for general information purposes only. So traditionally, when you buy stocks or crypto, let's say you start off with $1,000 and the market goes down, that means you have to wait for the market to come back up before you can break even. So BEP stands for break even point. The Buy More strategy tool is a series of mathematical formulas that serve as the blueprint for determining the optimal price point and dollar amount to purchase an instrument to lower your break even point with each transaction. So with the Buy More strategy tool, instead of starting at $1,000, you might start at $200. And as the market retraces or falls, you buy more at a lower point, which lowers your break-even point. And as it keeps on falling, you buy more, your break-even point lowers even more, you buy more, break-even point falls down, you buy more. And so instead of being $1,000 at the top, invested, you're $1,000 at the bottom invested, and once the market bounces back, hits the floor, and goes up, you're already at a profit. So you want to think of dollar cost averaging, meet John Gotti and Arnold Schwarzenegger, very organized and on steroids. That concludes a brief introduction. The features. Ladies and gentlemen, this is the Buy More strategy tool. As you look at the top, it tells you the level. It tells you what dollar amount to run your first initial market order with. On the sides, these are going to be your price points. You only buy on the quarters, 75, 50, 25, and double zero. And then these are the dollar amounts you're going to purchase for. So if you add up 25, 10, 15, 20, 25, you'll get a total of $95. So the big number represents the total amount of that of the whole cycle so far that you've completed. Now, if you add up the 30, 35, 40, 45, you'll get a total of $150. So the small number represents that particular total cost for that particular cycle. Now, if you add the 150 to the 95, you get a total of 245. So that 245 represents the total for those two cycles. So if you complete this whole cycle, it'll be a total investment of $4,325. So for example, let's say you go over the 10 cycle, that's where this number comes in. So this is a $10 transaction increase. So you look at the last number, 205, and you just add $10 to it to get to the 11th cycle. So that'd be 215, 225, 235, 245, 12th cycle, 255, 265, 275, and 285. And that concludes the features. Now, how it works. So let's take a look at this example. All right. So let's look at Doge, for example. Let's say the current price is 0.3727. You're going to find a decimal point. You're going to look at any digits in front of the decimal point. If it's not, then the first two numbers is what we call the whole numbers. And then the next two after that is what we call the pivot numbers. So when you run your market order for $25, let's say it comes out at 13, it comes out at 0.3727. You look at the pivot numbers, 27. So that's going to put you right here. So that's where you're going to start at. So the next purchase point is going to be at 0.3725 for $20. and that's what you're going to set your limit order for. So these are all limit orders now. So the next one's going to be 3700. Once you hit 00, it's the end of the cycle. You go to the next whole number. That will be 3675 for $30. So 0.3650 for $35, 0.3625 for $40, and 0.3600 for $45. So these are all limit orders that you're setting. So as the market falls, these limit orders are going to be executed automatically without you having to watch it over it. So you want to go ahead and enter phase one. So that'd be $35.75 for $50, $35.50 for $55, $35.25 for $60, and $35.00. So if the market continues to fall, you go to phase two. Next whole number, $34.75 for $70, $34.50 for $75, $34.25 for $80, $34.00 for $85, and so on. And just as the market falls, you keep following this formula and you keep buying more. Once phase two is through and it keeps falling, you go to phase three. And that right there, ladies and gentlemen, is all you have to do. You wait for it to hit the bottom, you bounce, or once it bounces up, you're already at a profit. So let's say you have the decimal point and there's a digit in front of the decimal point. Well, the 9 would be the whole number, and the 65 would be the pivot numbers. 65 is the pivot number. You'll start at, you'll place it at the 65. Next purchase price will be $9.50, and you follow the same rhythm, and you just keep buying more as the market as the market retraces. Let's say you have 2 digits in front of the decimal. The 60 would be a whole number, and the 91 would be the pivot number. Same format. You find the 91 on there. Go ahead and plug it in, and you follow the same formula. All right, 3 digits. Same thing. The 5 would be the whole number. 20 would be the pivot number. You plug it in and follow the formula. All right, let's say you have a comma. All right, same thing. The 3 is going to be the whole number, and the next 2 digits after the whole number will always be the pivot numbers. So you go ahead and plug it in. And if you got 2 digits after the comma or before the comma, same thing. 96 is going to be the whole number. Next 2 digits are going to be the pivot numbers, and you plug it in. All right, that concludes how it works. Again, if you have any questions, you can email me. You also go to my website, and please follow me on all social media platforms to get live examples. Thank you for checking out the Money Making Money Mindset, where the money comes to you.